So in today's video, we're going to talk about 9 of the most common credit card mistakes I see people making, from beginners all the way through experts. If you watch this video all the way to the end, you'll find out what they are and how to avoid them, which potentially will save you thousands of dollars, and I guarantee you'll learn something new. So as usual, let's get right into it with the first mistake people make, which is closing their credit cards, especially ones with no annual fee. Many people think that if you don't use a credit card, the best thing to do is close it, which it turns out is the exact opposite of what you should do. If you have a credit card with no annual fee or no maintenance fee, never ever close it. This is because when you close a credit card, your credit score will go down. One of the factors for your credit score is your credit history or credit age, and if you close an account that you've had for a while, that could bring your average age down. Another part of your credit score that will be affected is your credit utilization. Even if you don't use the card, closing it will lower your total credit limit, which will raise your credit utilization, which will lower your credit score. That was a lot, but just remember that canceling a credit card will lower your score. Now, there are times when you should absolutely close a credit card or line of credit. Maybe you're churning sign-up bonuses on something like the American Express Platinum card, which comes with a whopping 150 points, link in review down below, but costs $695 per year to keep open, and you're not getting value from it after the sign-up bonus. Or maybe you've had student or car loans that you're finally able to pay off, which is a great idea. Those are the main 2 exceptions, but there could be others. So just a general rule of thumb, don't close a credit card unless you absolutely have to, especially if you're not paying to keep it open. Mistake number 2 goes along with the first mistake, and that is not downgrading your credit card instead of canceling it. So in the same case of the Amex Platinum from before, which costs $695 per year to keep open, or the Chase Sapphire Reserve, which costs $550 per year to keep open, some people will decide after several years that they're not getting any value out of it anymore, don't want to pay that hefty annual fee, and close their account. Again, closing the credit card will lower your credit score. But what if I told you there was another way to not pay the annual fee while also not damaging your credit score? Well, you don't have to guess because I already told you what it is. In that same example, you can downgrade the Platinum card to something like the Amex Everyday card, which doesn't have an annual fee. As far as the credit bureaus are concerned, you basically keep that line of credit open by moving it from the Platinum to a different card, like the Amex Everyday. It's kind of weird, but that's just how the system works, so just remember, always downgrade before you cancel. And for canceling your credit card, all that credit score stuff doesn't even consider what you could lose in point value. For example, some people either close credit cards with points still in their account, which could automatically delete them, or they quickly blow through all their points on low value things like shopping or statement credit. Again, in the same scenario, if you downgrade from the Platinum to the Amex Everyday, because it also earns Amex points within your Amex account, you won't have to give up all those hard-earned and very valuable points. And the same logic applies to several other credit cards from Amex, Chase, Capital One, and others too. So not every card will let you downgrade, but typically any card with an annual fee over $200 has that option, and it never hurts to just call and ask. So remember, always look into downgrading before you cancel. Mistake number 3 is not hitting that subscribe button. It's quick and free, I'll love you forever for it, and you can always change your mind later. For real, mistake number 3 is carrying a credit card balance. So you need to know that when you're taking a credit card, you're not just getting free money, you're borrowing it. It's basically an unsecured short-term loan, which means that you'll have to pay back the bank at the end of every statement cycle, or you'll be charged interest. But when some people get a credit card, they think, oh, my credit limit is $1,000, I can max that out. Then I'll pay off some of it and put the rest on my next bill. They do this because they think that they'll be able to pay it off later. But that is easier said than done, and they keep putting things off by not paying off that balance, and before they know it, they're paying ridiculous interest fees on the balance. No one should have to pay interest on their credit card. It's not like a student loan or a mortgage where it's unavoidable and also for a good purpose. Nobody needs credit card interest or debt. There's plenty of better options. Credit card debt has some of the highest interest rates in the country, and you can see rates of up to 30% APR. For some perspective, even a 30-year mortgage right now is only 7%. So most of the money that banks make actually comes from people who pay that monthly interest. So as soon as you start paying for interest, you are playing right into their hands, and you're paying for my free travel and everyone else's too. Instead of that, if you play the game right by paying off your balance, you can actually profit from this and earn your own free travel. If you can, set up automatic payments on your statement balance so you won't forget and won't pay interest that you don't have to. Mistake number 4 goes hand in hand with the previous mistake, and that is only paying the minimum payment. I see a lot of people make this mistake because it's so easy to do. You get a brand new credit card and swipe it, but when the bill comes, it just says that you can pay the entire statement amount, which is usually a lot, or you can just pay the minimum, which is usually like 20 to 30 bucks. So you just make the minimum and think, hey, I paid my credit card bill, so that's it, which is exactly what the credit card companies want you to believe. But that's not really it. Similar to the previous point about carrying a balance, if you only make the minimum payment, you won't pay off the whole bill, which means that the interest will be charged on the rest of that bill amount, which is basically going to be all of it. So again, same idea from earlier. Paying interest on credit cards is not only very bad and what the credit card companies want you to do, it's also completely unnecessary in most situations. So set up an automatic payment, and instead of clicking the minimum payment, make sure you pay the full statement balance. This helps to simplify and automate as much of the payment process as possible, but also make sure you only spend what you have, and you can use free tools like Mint to keep track of everything all in one place. So pay the full amount and earn your own free travel, don't pay for mine. Mistake number 5 is maxing out too much of your credit limit. So let's say you get a new credit card with a $1,000 limit. You go spend $1,000 on it, and you plan to pay that off at the statement due date. So the due date comes and you pay it off, but between when you swiped it and when you paid it off, your credit score went down because you had a 100% utilization. Like we talked about earlier, your credit utilization, or the amount of your total credit limit that you're using, has a big impact on your credit score. So if you have a $1,000 credit limit and you spend all of that $1,000, that is 100% credit utilization. And this actually applies across all your credit cards in your name, no matter where you got them. So generally you want to shoot for less than 30% utilization. That's what banks and lenders like to see, because the more credit you use, the more debt you have and the riskier they think you are, so they'll lower your credit score. So the best way to avoid high credit utilization is to know when your statement's close date is. It's usually very easy to find in your account. For example, when you get a credit card with that $1,000 limit and on the first day you spend $1,000 or 100% of your limit, your billing cycle ends on the statement close date, but you don't have to pay until 20 to 30 days after that date. But the statement close date is also when the bank will send your balances and your credit utilization to the credit bureaus. So since you're using 100% of your limit, even if you plan to pay it all back in 20 or 30 days, all the credit bureaus see is, man, you used up all your credit limit? That's really sketchy. Basically, they're worried about you defaulting on that debt and declaring bankruptcy.
I declare bankruptcy!
So they lower your credit score because you're seen as riskier. So just pay attention to that statement close date and try to pay it off before that date, either in full or as much as you can. Mistake number 6 is getting a cash advance, which is kind of like taking out a loan, but from your credit card instead of your assets or income, which sounds great until they slap you with up to 30% interest rate. That interest will end your career, especially because cash advances tend to be for large amounts that will use up a lot of your credit limit, which, as we covered earlier, is also really bad. You should never get a cash advance unless it's a sky is falling situation and you need cash right away. If you do, there are some 0% APR cash advance cards, but you will still probably get hosed with fees one way or another. It's like playing with a flamethrower at a gas station. You're gonna get burnt or explode. If you really need some financial cushion, there are 0% purchase APR cards that do the same thing, but for stuff that you buy directly with your card. But even that can be risky if you're not careful. Trust me, I know it's tempting to do, but don't do it. There is no quick way to get free money. You're making a deal with the devil. If you don't have enough money and it's not an emergency, you should come up with a payment plan and stay away from cash advances. Mistake number 7 I've seen many newbies make is getting too many credit cards too fast. And I'm speaking from experience here when I was first starting out. First you hear about cash back on this credit card, then sign-up bonuses on that credit card, then you hear about the points game with that whole other trifecta of credit cards, and those of us who use those points to get free first-class flights, huge hotel rooms, and the works. So after a few months of applying for every credit card under the sun, all of a sudden you're now getting rejected. That's because when credit card companies check out your credit score, they see you've opened like 6 cards in a few months and they'll go, huh, that's weird. What do they need all those cards for? Just like with maxing out your credit limit, they're worried you're going to default, or they think that you're trying to game the system, which we are, but we're trying to keep it on the down low. Spacing out your credit card applications will help with this. On the flip side, you can also submit multiple applications on the same day because it takes a while for that info to get reported to the credit bureaus. Let's say I applied for the American Express Gold Card and then decided I also wanted to open the Chase Sapphire Preferred, both of which have awesome sign-up bonuses. If Amex approves you for the Gold, there's almost no way that Chase would know that immediately, and you would likely get approved for the Sapphire Preferred too. Now that's a power play for more experienced people, but here's some advice that won't have the credit card companies sweating over your score. Try to only apply for a new credit card every 6 to 12 months. Of course, if you're more experienced, you can do it more often. Like I've gotten away with a new card every month for like 6 months, but not everyone will be able to do that. So make it easy on yourself. Don't get too many credit cards at once and space them out a bit. Mistake number 8 I see a lot of people making is not taking advantage of all the perks of their credit cards. So when you get a new credit card, you want to make sure you understand the perks and benefits and know where they fit with your other credit cards. That's why I make a lot of these videos on my channel to go over all the little benefits and secret hacks that you can use to get the most out of your cards. So subscribe if you want more of that. When you end up with a metric ton of credit cards like I have, it can be hard to keep track of which ones give you what benefit. You can either memorize them, which can get crazy, or use free tools like card pointers to help with that. I'm not sponsored by them or anyone else for that matter, but it's very helpful for remembering rotating card categories and tracking credits and offers. Some credit cards like the Amex Platinum have a monthly Uber cash credit that is use it or lose it every month on top of tons of other credits, and it tracks all of those. So it's really important to make sure that you're using your benefits to offset some of that annual fee. And if you don't, you're leaving a lot of money on the table. But also don't go too far out of your way from your normal spending habits to use these credit cards. If you're not getting value from a card that costs a lot to keep open, there is nothing wrong with closing or downgrading it. So just make sure you're getting as much value as you can out of your credit card perks. Mistake number 9 could end up costing you tens of thousands to even hundreds of thousands of dollars. And that's when people go in without a plan and get the wrong kind of credit card. I see this happening over and over again because some people don't go in with a plan. Let's say you're a college grad who has a checking account and the bank goes, hey, you have a checking account with us. How about you also open a credit card too? So you get the credit card but are unable to apply for another way better credit card that you found out later because you opened up too many credit cards. That actually happened to me, by the way, true story. Then there's people who go shopping and are asked by salespeople, hey, why don't you get a credit card with us for $100 off this purchase? And then they use it once and forget about it. Yeah, that was also me. Both of those are bad because I wasn't thinking about why I was getting those cards. Credit cards are just another tool that you can use to manage your money, and like most tools, there are good ways and bad ways to use them. So let's say every year you pay a lot of money in rent or mortgage, like I do because I own a home in Southern California. It's great, it's so great. You can get the Built Rewards MasterCard, which lets you earn points for housing without having to pay any transaction fees. By putting my mortgage and HOA on it, I'm earning points that could be worth over $1,000 per year for free. And best of all, there's no annual fee, so link down below if you want to check that out. Or let's say you spend a lot of money on groceries and gas, like we also do here in SoCal. You should get a card that gives you 5% cash back every month on the category that you spend the most on. The City Custom Cash is a phenomenal card for this, and it also has no annual fee. So the most important thing I've learned about choosing the right credit card is that you need to be very deliberate and find the card that fits your individual spending habit. Also, don't get too attached to a credit card. Even if you already have a card for a specific purpose, that doesn't mean it's always going to be the best card for that case. So don't be afraid to leave if a better deal comes along. For example, I've had the Chase Sapphire Reserve for years, but they've been raising the annual fee, removing some important perks, and there's other cards that are coming along that are chipping away at its usefulness, like the Built Rewards card, which gives almost the same points with no annual fee, or the Amex Green with a much lower annual fee. Link to that review is down below. So since I'm not getting as much value out of the Sapphire Reserve, especially with lots of overlap from my other cards, I'm going to try for a retention offer, and if I don't get it, I'll downgrade to one with no annual fee. So don't get too attached to your cards. They're just tools, and we're playing to win here. When something is no longer useful to you, move along. So those are the most common credit card mistakes I see, but let me know if you have any others you'd like to share. Thank you so much for watching. If this helped you, leave a like and might as well subscribe while you're down there too. Check out those links if you want to support the channel. Have an awesome rest of your day, and I'll catch you in the next one. So a little bit of a bonus clip. I had to get that Hot Pocket that flew off the Dremel. It's all the way over there, and I don't really have a good path to get over there, so I'm gonna have to crawl under this desk and grab it. Mission accomplished.